Welcome back to the Market Minute. We cover the market conditions that impact your investments and what you might expect when either purchasing or financing a home right here in Florida. Let's jump right in. Well, it's a relatively light news week in the financial markets. However, this morning, the National Association of Home Builders sentiment came in lower than expected. In other words, home builders are not positive looking forward. So that softens the market a little bit as far as homes. The other news this week, obviously, is the big news in the Fed. The Fed meeting begins tomorrow on Tuesday and wraps up Wednesday. At 2 o'clock, the announcement will be read, and then after that, the press conference. And then the following day is where we kind of see it sort itself out. So what we expect is this. There's a 0.75 increase in the Fed funds rate anticipated on Wednesday at 2 o'clock. After that's announced, well, there's a slight chance, actually a 100-point increase, which would be a full percentage point in the rate that banks charge for overnight funds. Let's be clear on this. The Fed funds rate is simply the rate that banks charge for overnight funds, and it filters through the rest of the economy. However, it does impact the prime rate directly, and that's seen on equity lines of credit, things like that. So car loans a lot of times ride on those as well. So that will make a difference on that. It's already baked into the mortgage market. So home prices could very well be impacted by this as far as rates if they go up. The critical marker on this, so is actually a 10-year treasury. It doesn't follow the Fed funds rate exactly. However, it's a very good determinant factor as far as the estimate of where real estate mortgages will go in the future. In mid-June, we had a 3.5% 10-year treasury rate. That been the ceiling. It hasn't gone above that. And that's when rates were about 6.25 in mid-June. This morning, it went up to 3.51, and now it's back down to 3.47. So we're right there. That's a very critical level of support to hold. So this is our advice. We're floating into the report because typically there are 3 stages of response to the Fed announcement. There's the original announcement, then there's the press conference, and then, of course, Thursday, then we'll see what the markets determine after they've slept on it. So this is the situation. We have a little time to lock in those situations if the market starts to move, typically during the press conference. So that's the strategy. Hopefully we can float into that and we hold that ceiling of resistance on that 10-year treasury yield. And then we look to the announcement in the press conference and see what it has for us. But we're seeing, rates right around the 6% level right now where they were in mid-June. So hopefully this helps you out. If you haven't checked out our lessons on lending, you can check it out right here. And if you'd like to see our previous Market Minute, it's right here. Again, my name is Brent Starts, is Unitas Lending, and this has been your Market Minute.